Welcome. In this video, I'll be sharing with you the best price action strategy built with example to improve your trade and how to find best trade using those concepts. As always, we start with the basic foundation. For that, I'll be sharing with you most commonly traded chart pattern, which will enable you as a beginner to start making profit. So stay tuned. So I have two best chart pattern to share with you today. The first one is cup and handle. Cup and handle is a great complex breakout pattern that can be traded as a trend flowing chart pattern. So if you can observe the screen, it shows a classic cup and handle forex chart with an ongoing uptrend. You notice that the price was in uptrend. So during the uptrend, the market traded below the horizontal resistance. So this is the horizontal resistance. So the market stops and starts trading below the horizontal. Remember, the price was in uptrend. So this we brought your attention thinking that the price will do what the price will reverse. But what happens immediately? The price hit the resistance, it comes back with full force, it moves again and comes back with full force, but it did not reach this support level. That shows you bullish momentum in the market. So the criteria cup and handle means is that the first thing is what the price is hitting the resistance first two times, it's already sold off strongly, so the reaction shows significant more bearish strength. The price at the last resistance or did not move lower much as the first one, so the price did not move lower much as the first one. Notice that. So whenever you spot this formation in your chart, just know that the cup and handle is forming. The second thing is the distance between here. You get the point. This is distance between the resistance level got shorter as well. It means that the price is returning to the same level sooner as the bullish market participants are driving the price up quicker. We all so whatever this zone is called absorption. This very zone is called absorption. So the next thing you need to do, just wait, please. Let me show you how to enter this trade. So whenever you have a breakout, very good one with a strong candlestick. So this is a very good breakout. This shows us that this total dialogue here has been resolved with this bearish candle. The next thing you should do, just wait patiently for retest. So if you retested this rectangular resistance and it shows a good one, I might be in this trade early. My entry should be in this candle, but let's take it that this is illustration video. But whenever you do that, make sure that your stop loss is away from this rectangular zone, because the market will be finding liquidity for the push. Smart money, that's where smart money concept comes into play. So that should be a video for another day. So set your stop loss below what extend your. This is a very good reward risk. I always have a 1:3, 1:4, but let me do 1:4 for it. Let me show you how everything happens. So that's how to trade it. So we're going to another example called fake out. So the price did not wait much days for you to hit your target. So if you have gotten a value so far, why can't you consider subscribing to getting more tips like this as a beginner? So let's move to the second chart pattern I have for you today. So the second chart pattern is fake out. Fake out is a trend continuation pattern that leads to complete trend reversal. So whenever you find this setup in your chart, just be aware that this total uptrend is about to reverse totally. So looking at the formation, the price was in uptrend, clear uptrend. After a while, it unfold, distributing for long, ranging here, showing you no strength, no direction, nobody knows what will happen. But after a while, we have a very big push with a bullish candle showing us that this trend may continue. Aggressive traders may be in this trade. Most aggressive traders will take this trade because it's quite taking, but after a while you notice that the price starts slowing down, moving back into that distribution stage, searching for liquidity. But unfortunately, the liquidity grab does not work. After grabbing some liquidity from this bar zone, it does not pick it up. So the next thing you need to do is wait for breakout. So this is breakout entry. So whenever you saw this breakout after this formation here, place your stop loss above here and target your 1:2, 1:3. So that's how to trade it. But this concept is very hard for new traders because a lot of momentum shift is happening there. That is the volatility development is not worthy around this fake out. So you need to be careful. My advice you just to risk 1% of your account. So now place your stop loss over here. Sorry. Extend it a little. Maybe here. Send it down. Target your 2%, 1:2, 1:3. So let's see how everything happens. So if this is the first time coming across, consider subscribing, so that I'll be giving you more good updates to improve your trading journey. See you guys. Bye for now.